Welcome to Game Plan Sunday. Today is January 26th, and we're kicking off our session here. We're going to talk about what occurred over the past week, what we noticed coming down the pipeline this week. How can we take that information and make some money in the markets right now this week? All right. So this past week was a lot that was going on. And again, forgive me because, I'm not in, my best mental state with the death of the legend Kobe Bryant. We're still dealing with that. But from what I can recall, over this past week, we had the World Economic Forum. Did anybody actually check into the World Economic Forum? The World Economic Forum, it was all week in Davos. All the people that run the world, basically, they're coming to Davos to meet together to figure out what they can do to impact the world in whatever way they choose to. So you got to remember, the wealthy are always at the top. They're the ones who create the businesses, create the jobs, and, politicians alike. So there were lots of, people that were there giving interviews and stuff like that. So, if you guys missed that, you can always go back and chime in on some of those interviews from those legends and, politicians, whoever was there. President Trump was there also. So the World Economic Forum, that was actually, interesting. And then we had the coronavirus that popped off. I know there were people that was in the group that was asking, hey, what happened to the markets? Why did they go down? Why did the VIX pop up? And, we talked about this last week, on the technical side, we already knew that, the VIX was, so low every time it hit that level. And I'll pull the screen out here and we'll go over it always go back up. You know what I'm saying? So we don't know what it is, but I just tell, and if you guys go back to the last Game Plan Sunday, you go back and see when I tell you all it takes is one small little incident that will be the catalyst to make it, catapult. So it's just the technicals. We use the technicals, but then sometimes you got to have the story, okay? The story to go along with the technicals. And that's how I assess things when I'm actually assessing and making decisions. I see what the technicals are, and then I have to assess different kind of risk. These are like mathematical variables in the equation. I'm changing variables. What happens if this happens? What happens if that happens? And then you have to kind of foresee like the outcome of that. And so with the VIX being so low, all it takes is just one small catalyst. And then you had this coronavirus thing that showed up, I think it was like Tuesday. The interesting thing is that the markets didn't really sell off on Tuesday. It was later in the week that the markets really actually started to digest the whole situation with the coronavirus, which that was interesting because, again, Tuesday was just, it's light. The markets are still pumping, hitting highs, Wednesday. And then later in the week, it was, we got the coronavirus scare started coming again because then there was, storylines that, it's in the U.S. and that you also have, confirmed cases in Wuhan, China, and other places. So the coronavirus, that was actually the story behind, the markets, why the markets was actually, selling off or whatever. It's fears that, this thing can really spread. OK. Similar to other viruses that we've seen before, like Ebola and stuff like that. And there are fears that this is going to happen. Now, if you guys watched the previously Game Plan Sundays, I don't know if you guys seen any of the new videos that we've been doing. I've been doing a lot of work to get you guys some great content, better content. Hopefully you subscribe to the new YouTube channel. If you haven't, make sure you go to subscribe, hit the notification button. But if you actually go to the end of the videos, at the end of the videos, I'm actually posting the synopsis of those things that you need to catch up on for the week. Like whatever important details, I'm doing those at the end of the videos from Game Plan Sunday. So y'all tell me how y'all like that. But if you go back through there, you'll see all the events that I'm telling you, okay, this is what's happening this week. This is what you need to be aware of. And we go through it through Game Plan Sunday, but it's just a reminder at the end of the video that you can see, okay? So at that video, I told you guys that at the end of the video from last Game Plan Sunday, I told you about the Chinese Lunar New Year. OK, so this weekend is Chinese Lunar New Year. There's a lot of investors, banking on, big money to be made. And I just find that it's crazy how, the Chinese Lunar New Year, if you guys don't know, this is a big traditional holiday in China. And they have this red envelope thing where, one of the traditions that they do is they give people monies in these like red envelopes. But now everything is all digital. And I told you guys before, China's probably 5 years ahead of us, at least, when it comes to technology. You go over there trying to pay with cash and people will laugh at you like, because they don't use, cash. Everybody's on digital payments. Even myself, I've actually been on, let me actually get my freaking smartwatch, because I actually buy things on my watch, and I haven't actually seen cash in a couple of years myself. I've been using, smartphones and watches for my transactions when I'm out. So I don't carry cash. So they're the same way over there. And so what has happened with this digital, the technology changing, the people in China, they, are, expected to exchange a lot of this money online through their big companies. Chinese companies, they got like Alipay. Alibaba has like Alipay. You got these other companies that these Chinese people, they use like, faithfully. And so it was a lot of money that was banking to be made this weekend in particular. I just find that it's strange, okay? That, again, we don't know how these things pop up, if they're man-made, if they're, found in nature. We know what they say, stuff is, from an animal, but I mean, the thing is, people, throughout China, they've been eating all kind of animals for the longest, and ain't no coronavirus ever, impacted anybody. So again, I don't really know. They've been eating dogs, eating cats, snakes, bats, whatever. So to me, it really doesn't matter what story they say. Oh, they've been eating animals and now they got this virus. I don't really know. I don't know if I can even really subscribe to that. I mean, you take as you will. Okay, how many years y'all been knowing people been eating dogs and cats over there, and not one time did a coronavirus show up? Okay, I just find it strange. Okay, that the week that they're expected to make all this money, that this virus just pops up, okay? And the thing that's important to understand is that with this virus, as it's starting to spread, that they are shutting off cities, like whole cities getting shut down. Ain't nothing come in, can't nothing come out. And that hurts, money. That hurts a lot of money that would have otherwise been made in the markets. So the Chinese stocks are selling off crazy because of this, right? The investors already know this is not good for business. And it's interesting because you guys remember the weeks prior, we just got the new phase 1 of the 4-part trade deal signed with China. Okay. Do y'all know the implications of something like this? What that will have on, doing trade, trying to adhere to an agreement that they just inked. It's not even a whole, trade. It's only part 1, phase 1 to adhere, when they're blocking off, shutting down cities. And the markets is getting even worse right now because more cases are popping up by the day. They're confirming more cases. I don't know how many cases they got confirmed in the U.S. right now, maybe 2 or 3, could be more. I don't know, but a lot of people are dying. Okay, so people are dying every day. The numbers are elevating. And so investors fear that this thing is going to get out of control. Now, there was a statement from Trump. There was a statement from China that they had it contained. I think that was on Thursday or Friday. And as we can see, that's not true. It has not been contained. This thing is still spreading. Okay. So that is, a particular interesting risk that as we look through, 2019, we look at 2020, we had a really great year to start off with in the markets. But, I think we talk about every Game Plan Sunday, particular risks that we have to be careful of. OK, this is a risk that caught everybody with their pants down. Anybody have even guessed that this would be a particular risk of the markets? I mean, again, that there's a 2020 election. OK, so that's a particular risk. You understand that the Feds, they may be overcooking the economy. Inflation may show up and force the Feds to make some kind of decision that would negatively impact the market, meaning raise the interest rate. That we know that's a particular risk. We also understand the situation with Iran retaliating. That's a particular risk. North Korea, they still, they've been kind of acting up. That could be a particular risk. We can understand all these kind of risks that we have to, factor in and keep somewhere a mental note that, okay, before I put all my money in the markets, I got to understand that these risks are out there. This coronavirus is a risk that none of us have actually been able to calculate. It just showed up. Okay. So because it showed up, pretty much out of nowhere, at a time when investors was anticipating making a lot of money, okay, because it's the Chinese Lunar New Year. Let me ask you this. Do you guys find that to be strange that this virus just pops up in China at the time of their Chinese Lunar New Year, where people are all over the streets, all over, okay, lots of money is exchanged? You don't find that to be strange that this virus just pop up out of nowhere? And they say it comes from animals, people eating animals over there, exotic animals like bats and snakes or what have you, or dogs or cats or whatever the case may be. That's what they're saying this stuff is coming from. But we've known that these people been eating, not all of them, but some people, they've been eating these animals, for centuries. I mean, whatever, what I'm saying? Like, but there's never been a coronavirus. So again, I don't know. Y'all just let me know how y'all feel about it. I just think that it's just mysterious. It seems like some kind of attack to attack the monetary system. Again, we had the swine flu situation in China last year. Okay, you gotta understand we're at war. It's a trade war. Anything to hurt the economy, that's just what it seems to be. We had mysteriously a swine flu showed up in China last year. Who do you guys even remember that? You see how easily people forget all these things? I have like the worst memory, but I do remember certain things. If it doesn't make sense to me, I remember it. Okay. I got like this spidey sense. Okay. I don't know. My mama, she called it the Holy Ghost if you're in the church, right? I call it the spidey sense. A lot of people got spidey senses and you probably just haven't not acknowledged what it is, but it's whenever something shows up and it doesn't make sense to you, it causes your brain to like, you can't really rationalize it. And so it sticks out like a sore thumb. So I don't have the best memory. You can ask my wife, she can tell you my memory is shot, man. I wish I had better memory, right? But I will remember things that don't make sense. Okay. So when things just pop up out of nowhere, don't make sense. It's like, okay, I can remember that. So anyway, that was the situation there. Okay. We're in a trade war, we're in a war. And so it seems like a lot of different things are happening to bring, China to their knees, if you ask me, because again, we're trying to get the upper hand in this trade deal. And I don't know if it's us. I don't know if we're paying other people to do it or whatever the case may be. We know that situations happen over in China. And again, these things will impact trade because they shut down the city. How are you going to get things to and from China? Okay. That's just not going to be positive on any front of business. Okay. That's right. Topaz, bio warfare. Yeah. Iraq. Yes. That's all those situations. Yes. These are all lots of risk, okay? And even right now as we speak, I think before we jumped on, I saw a headline of a U.S. embassy being bombed. Can anybody confirm? Justin's a vet, so I think it was a U.S. embassy bombed over there, or was it Baghdad? Just right now as we speak. And as you guys looking at the markets right now, on my screen here, you can see the markets are not happy. So whatever is happening, and again, God bless, Kobe, he's gone. I don't think the markets are reacting towards that. Whatever the market's reacting to is something that's not good. So you guys can see right now, and I told you guys 2 game plan Sundays ago. If you don't remember, go back and watch the video. I'll tell you when I'm looking at these numbers and they flashing like this, okay, this is not good. Okay, when you see that these numbers are, this is after markets, okay? We're looking at the NASDAQ down over 100 points right now, okay? The Dow is down, 200 points right now. Okay, the ES down 27 points. The Russell down 15, almost 16 points. Okay, so we have risk that's in the system. Okay, and the markets have been pushing up to these crazy highs. You got to remember the reason why the markets are pushing high is because the Feds are injecting that liquidity in there. Yeah, the facility in Baghdad got hit today. Okay, thank you for confirming that. And that could be why the markets are reacting the way they are right now. So you got war, rumors of war, all these things, impact, money in the markets. Like they say, buy the rumor, sell the news. By the time you get in the news, it's just kind of late, right? And so anyhow, what I've been doing is actually positioning myself to take advantage of when the risk shows up that, I need to be in position. So I gave you guys some plays. I don't know if you took advantage of those plays last week. Told you guys TLT, which is bonds, GLD gold. That's my number one money maker. Gold, any risk popping, I just get it popping off GLD anytime. GDX is another one. I told you guys they had some cheap calls on GDX. That's another one right there. And that was to get yourself in position for whatever risk. I don't know what the risk is. I did not know what the risk was going to be, but I knew that we were at a position that, hey, this thing can't go on forever. And so, right now, those plays are benefiting, as you guys take a look here at the markets right now, you see that the ES is down right now. We're looking at the futures from boom, all the way down here. So we've already broken past the 9 and 20 moving average. We're headed down to the 50 moving average. Okay. I know I got my fib levels here. We'll see if it stopped here. If not, next level will be this 50 moving average. Okay. And again, I can redraw these fib lines. I just don't really have time to do that right now because I'm really not trying to keep you guys too late today because I'm just really not in the mental mind state really. So that's the ES is down right now. Let's take a look at the VIX. I'm going to take a look at the regular VIX. All right. So if you've been paying attention to every game plan Sunday, this should not be by surprise to you guys. Most of y'all been here. You already know these levels. I've had these levels on forever. These levels, they hold true. They've been holding true. They have not failed us yet. So we stay true to our levels. Every time we hit this level, what happens? The VIX rebounds. That means, hey, it wakes up. The greed comes out. Fear comes in. The only time it's breached was this one time here. Every other time, it has held these levels. So when we hit this level here at this red line, as you guys see on my fib level, that works. Okay. We caught a buy trigger that was in here. This is why I started telling you guys to get in position with bonds, gold, take on, you got to get some kind of hedge in the market. You can't be all alone. And this is a fatal mistake for a lot of new traders. I know we got some new traders that's in. But you get excited about the hype. You get excited about the news. You get excited about all the news prints, and you get in at the wrong time. The time is to get in before the move happened. Okay, to make money, you got to come from here to there. Okay, you got to come from here to there. All right. So by the time you see that pop up like that, a lot of new traders are jumping in the markets and they're getting their head cracked because you're jumping in off the hype. You're being emotional. You're trading off of emotion. Okay, you got to let the technicals guide you. Okay. So as we saw with this situation here, we got the squeeze that's on here also. Okay, we got the trend and everything is moving up. Okay, we understood that we had overhead resistance. Let me just clear that real quick. Okay, we understand we have overhead resistance right up here at this line. Okay, and boom, we got that trigger. All it took was for the coronavirus thing to, I guess, to escalate a little more. Okay, because again, we caught the first whip of it on Tuesday. The markets, kind of shoved it off, and then more cases started popping off. Then it's like, whoa, boom. Okay, so now they want to react, and this level has been, pretty true up here. So it's holding us to us right now. We got another target up ahead here at this level. Okay, the big target is up here, but I don't foresee anything that, as of right now, that will take us there. Unless things really get out of hand with this coronavirus thing, a lot of people die, and it just starts to get really crazy. That will drive this all the way up there. I'm not banking on it to do that. It could. I'm just thinking that okay, it's happening right now. Maybe they'll contain it, and this will help to get the equities valuations down enough for earnings so that they can have some room to pop up. They're too high right now for people to even buy into earnings. You got to remember the name of the game is to buy low, sell high. Right. So. This is the VIX right there. Let me show you guys the futures. If you want to see the futures VIX, you just put the slash and the VX. Okay. So this is the futures on the VIX. Okay. And we see that it's already spiking up right now. You guys can see, VIX is up here right now as we speak. We do got some upside targets up here. Now, this be interesting because the last time the VIX was above this 200 moving average was way back last year, right? So way back here, right? Back in these zones. Okay. So be interesting to see us get back above those levels, which we are doing right now. That's because risk is coming into the markets. All the buyers came in and the market is going to drop them on their head. So that's why you can't just be of herd mentality. Okay. So with that being said, let me just take a look here at gold futures. All right. So gold is popping up just a tad bit here. We see it made that little move up right here. It's up against a resistance level. You guys can see that. Okay, and it's right there at this top. We're going to see if this blows through here, tomorrow. Unless they, if they're able to calm this, whatever's going on down. If it further escalates, then gold is going to be up out of here. Sorry about that, phone calls. Okay. So gold, again, wanted to be in position to gold, already in position for that. Another play I told you guys about was GDX. So GDX, again, this is get you some exposure into gold if you wanted to. Again, the calls on this was pretty cheap. And I think it was like $100 calls or something like that on this one. It was actually pretty cheap. But this is another name that you can consider playing in that. Also, bonds. So the bond yields actually dropped pretty extreme. I believe it was Friday. And so if you guys remember the yield curve class that we did, that's a really long class. It was like almost 2 hour long, man. But it was lots of value packed in that class. If you didn't see it, make sure you go back and see it so you can learn about the yields, learn about the bond market, learn about the yield curve, learn about the recessions and how they happen and why they happen, learn about the debt crisis. All of that is in that class. But anyhow, as you know that when yields go down, prices go up. Okay, so the yields went down finally, and prices on bonds are going up. We've been tracking bonds for a little while because, they were back here in this squeeze. We caught the signal. So, hey, this is a good time to get bond at these lows. All right. Equities are overextended and, you see it go up that way. Okay. So, and again, this is a proxy, bonds is a flight to safety. Smart money buy bonds when there's, risk or, calculating risk, you want things to, you need some safety. Okay. That's basically what that is. Now, utilities is a proxy for bonds. So because bond yields are so low, what's been happening, though, a lot of traders been actually piling up in utilities. All right. So utilities, here we are on utilities. You guys see utilities have been hitting all kind of freaking highs here. And that was an inverse head and shoulders. I think Ron, we called this out a couple of weeks back, I believe, Ron. Y'all know Ron is a pattern king. So, Ron, I think we confirmed this one here. It was something kind of like that or whatever. And you see that it's breaking out of that move the way that it should. But that's a lot of money. When you see all this money piling up in utilities, it's interesting. So, but you've been blinded by it. I know a lot of you guys have not seen this because you've been so busy looking at equities. You've been so busy looking at the S&P hitting new highs and the NASDAQ hitting new highs that you haven't seen this moving lockstep with it. That's a divergence. Okay. A lot of money piling up in equities, a lot of money piling up in utilities. They should normally play counter to each other, but they've been moving up all together. So that should have you on the edge, like when they break and they, go through their normal correlations, then that's fine. But when they're moving together, it kind of makes it tough because it's like, okay, something isn't right. Okay. A lot of smart money is piling up over here. And this is a safety zone. Okay. Like this is for safety. Why are they piling up into safety? Really interesting stuff. So that is, utilities has been crazy popping. It was a short little squeeze. So I don't know if you guys caught it. I did not actually, I did not actually participate in this trade itself. However, it would have been definitely nice. But the squeeze itself was 3 days, so sometimes I react a little slow with, squeezes. I like to see them about, 5, 6 squeezes. This thing popped off in 3. So I was like, okay, I was thinking that maybe it was, finished, but it wasn't. It's still pumping. So that's interesting. So if you guys in the group on Facebook, I also told you that that this is a play in financials. So let's take a look at financials. Okay. So actually, before I even go to the financials, let's actually go to the Russell right now. All right, so just taking a look here at the Russell, it was interesting. I think I called this out, and I actually did call this out in the group on Facebook. The Russell was in a squeeze here, and it was showing weakness. Okay, so the play was called out. I was telling you guys right here that we got some confirmed weakness. I wasn't too sure here. I know we caught this top, but the markets, the markets sometimes blow through those tops. I want to see it how it's going to behave afterwards, right? And it didn't clear here. That was just showing signs of weakness. Although while this was showing signs of weakness, the NASDAQ and the ES are still going up. But normally the Russell will react before the rest of the indices. So the Russell, I like to use it as a leading indicator. If the Russell pops, they normally follow. If the Russell falls, they normally follow afterwards. So with the Russell coming down here, again, I caught it. I was like, okay, well, we're in a squeeze, right? And then the trend started to reverse. Okay, boom. So this is, I was like, okay, looking for some short exposure in the Russell. Okay, we do have a sell trigger that's right here on the Russell. So definitely gonna have the Russell in focus this week. All right. With that being said, financials. So the financials, this is actually another point of interest here. So you guys can see we got levels at the top. That's, definitely holding true. Financials, the market's been going crazy high and the financials have not been able to clear this level. That's a sign of weakness. We got lots of short signals that's in there. We got this nice rise up, bumping the top, bumping the top, bumping the top, rollover. Okay, it's a rollover. So the squeeze is still on here. We've just been actually looking to get in position here in the financials for some short exposure. Okay, again, just looking to make money off the short side of the markets where it goes short. And this is where I would, prefer to be positioned, in this sector here. And again, there's particular risk with the Feds, and, juicing the markets up with liquidity in the repo market, the Feds buying treasuries. I think this, if I can recall, this month, they slowed down on their expansion. Okay. Which that's interesting because if they pull out of them, they're trying to pull out of the markets now because they juiced it up. They're trying to find a way to pull out of the markets, but I don't know if the markets is ready to let them go. I don't think the markets is going to let them go. The markets is going to throw a hissy fit. And so them trying to do that, which again, we'll find it out this week, because what's important this week is that the Feds will be giving their monetary spill this week on, rate decision, on policy decisions of the interest rates, which, consensus is basically that the Feds are not going to do anything. The rates will stay at the same. It's about 1.5 to 1.75% range, in that range that it has with the interest rate. So markets are expecting for them to stay the same and not to make any decision. I carry the same sentiment. I don't think they're going to do anything. However, if inflation could be showing up, and that could force the Fed's hand. Again, we're yet to see how that plays out, but okay, excuse me, who's that? Dustin. Okay, would you enter positional exit if it breaches 29 on the hourly? Just looking at here on a daily, just give me a second here. So again, when we take a look at this, you always take the wider approach, right? You take a look at the big picture, right? Let's take a look at the weekly. So take a look at the big picture. We got the weekly. I just showed you guys the daily, right? Now you take a look at the weekly. This is what the weekly looks like. For one, overbought, okay? So I'm gonna just put OB for overbought. That's a sign that, okay, this thing has to get exhausted. When it gets exhausted, I wanna get positioned to the short side. It's not, normal for it to maintain at these levels for a long period of time. It's overbought up against resistance. These are two technicals that you put together to make your decision. I hope you hear me, Dustin. So we up against resistance, smack up against resistance. We're overbought, okay? There's nobody left to buy, okay? Then you freaking have the stochastics rolling over. Momentum is dying, rolling over. Momentum is rolling over here, okay? And so to me, it's just a higher probability for this thing to fall before it goes higher, okay? So for that reason, it's not specifically, to me, it doesn't have to be a specific price point to actually even get in on this. Once I've made my decision that that's what I'm going to do, then I just need to get in and manage my risk. Not all the time are you going to be able to edge out and get the best pricing point, but because we're options traders, we're swing traders, you don't have to really worry about too much about, trying to get the very best price. It depends on what time you can assess the markets here. And take a look at it from that perspective. So this is what, just taking a look here, and this is my intraday chart here. But basically what you want to do is see if this thing, just taking a look at it really, this 200 average here, this line here, okay? You want to see if this thing is going to breach that. And again, this is closed right now, but probably more than likely the way the markets are right now, this is going to be breached in the morning time. And so, yeah, I mean, for me, I'll be looking to play this short. Anchoring is a key. That's right. So I hope you guys found value in that. But yeah, that's pretty much what, what I'm looking at. Also, I guess I'll go over this one quick thing with you guys, and I'll take something for you guys before we bring it to a close. Netflix. This was an interesting situation here on Netflix. I did have a really nice butterfly play here, and I was pretty upset about this trade. I still have a spread that's on it. I got a credit spread that's going to be expiring, worthless because it's so far out of the money. I don't really have to worry about it right now, or I may close it out. It's once it get to like a penny or something like that. I mean, 5 cents or so. Either way, I'm going to pretty much get the whole 100% off of that one. But I was really upset on my butterfly trade because I was going to hold it through earnings, right? And you guys remember who's in the group? I said, would you risk making, was it $85 to make $989? And I don't know if anybody remembered that. I think it was 986, excuse me. But that was in the group on Facebook. There was a play called out. But the thing that was interesting on this one here, and I just want to touch it because I think it's going to be a good lesson for you guys too, is that, you know, on the play itself, you know, I was anticipating for this thing to go up to this level here. So 360 was the level, was my main target, but 350 would have been even great, you know, good too. I could, you know, skate it out with a good amount of profits on that one. But this is the main target. This is where we set the trade to come to. And this is earnings. Okay. So it was in position, but overnight, the stock itself went up to these levels. Okay. But in the morning time, sold off. Okay. So when it sold off, it sold all the way down here to this moving average, 200 moving average. And because I wanted to salvage some of my gains and not, you know, get rid of all my gains, I got out of the trade. Okay. So I got out of the trade. That was a part of my risk management so that I can salvage, you know, what I had. There's mixed signals, right? So again, you had an analyst that downgraded Netflix. That was, you know, when the earnings and stuff came out, you know, so that's why everything sold off. So it sold, you know, it sold off. There was an analyst that downgraded. Then the next day, there was an analyst that upgraded Netflix. Okay. And when he upgraded Netflix, this is what happened. Bing, boom. Okay. So I was right, but I still didn't make the money that I was projected to make because I got out. And this happens oftentimes when the markets shake people out of the positions. They see too many people are going for certain targets. The market knows when you have your orders in what everybody's going for. And that's why risk management is really important for you to understand. And no, I didn't lose any money here. And I could have held, okay? I could have held. And if I would have held, then I would have hit my definite targets. But because I was looking to salvage some profits from the trade itself, which I was able to, you know, I had to walk away with the minuscule, you know, wins that I got. And then I got to look at my play that went into fruition. And I had to say, hey, you know, chalk it up to the game. Sometimes you got to charge it to the game because trading is hard. Trading is not easy. No matter what nobody says, nobody has like this golden playbook that just, it works every time. We've seen so many times. And so when you see stuff like this, that shakeout, for me, I had to go into my risk management mode because we're not trying to take no losses. We want all wins if we can. And I got my win. I got my small profits. I didn't take no loss there, but I did miss out on the big profit. But hey, I kept my risk management together. You know what I'm saying? It was cool. I mean, I could have risked losing the whole thing and I would have been fine, but it's, you know, when it got to that level, I was done. And then you got the upgrade. That was a story and everybody hit the levels that we needed to hit. So anyhow, you guys let me know if you found that information to be valuable. And yeah, so yeah, just let me know what you feel about that. But that's one of those trader psychology things there to help you guys understand that, hey, even myself, I get shook up out of positions. A lot of people get shook up out of positions. You know, it just depends. You know, you don't want to get caught there holding on to losers, you know, hoping that they're going to come back. Follow your trading plan, follow your guidelines. You hit those thresholds, get up out of there. All right. So anyhow, what we need to know going on this week here is that we have earnings. Again, you guys got to remember we have earnings. Monday is going to be pretty light from what I can recall. I don't think any big names are going to be on Monday. But the rest of the week is going to be action-packed dynamite. All right. All the big boys are playing this week. I don't really know what to expect. You know, I think that I would be more optimistic than I am pessimistic. But anything can go. And it really depends. If earnings fail, that's not going to be, you know, good for the markets. I think it's really going to be, it's going to drag the markets down. I think it's going to be a big sell-off if that happens. So Tuesday, to kick everything off, we got Apple, we have 3M, we got AMD, we got eBay, we got Lockheed Martin, we got Starbucks, United Technologies, all of them kicking off on Monday. All right. So just remember also, if you're thinking about getting into any trades, you just need to know what's on the menu this week, okay? Because you may want to play it a little patient here instead of jumping into trades right off the bat if you know what's coming down the pipeline. So Tuesday, with Apple is going to be the key focus. eBay, and freaking Starbucks. Okay, those are going to be like the main ones that everybody's paying attention to for the most part. Then Wednesday, we got Facebook. We got Microsoft, we got ADP, we got McDonald's, we got PayPal, we got Boeing. I'm talking about juggernauts that's going to be on the menu for Wednesday. So you guys, again, there's no telling what's going to go down. We don't know how these companies perform. We got lots of weak economic data, but consumers are still spending, then they're more likely benefiting. So we'll see how that plays out. I can't tell it. Don't nobody know. Thursday, Amazon, Coca-Cola, Eli Lilly, EA, UPS, Verizon, big names. Okay. Amazon is going to be the biggest, thing that's popping, really got to pay attention to, what's going to happen for Amazon. So Amazon is going to shape up the markets. Apple is going to shape up it's going to shape, it's going to give us basically the prints that we need to see the direction of the market is going to go in basically. Facebook also. And then Friday, we got Caterpillar, we got Charter Communications, Chevron, Exxon, and Honeywell. So we got the oil companies. That's another thing is that before I even go any further, let me show you guys what happened in the market. Another thing that happened was the oil markets basically plunged, okay? I don't know if you guys have been tracking oil. But yeah, we got this nasty drop down in oil, okay? And it's really interesting with oil selling off like this, coming up here at these tops, dropping all the way down here to the moving averages, coming up for the fake out, dropping the anvil on your head, right? And it pretty much lands, around the same zone here, right? Every time. I got a level here. But when I did my extensions from this high to this low, I did get these levels here, and it did hit this level perfectly. So this lets me know that this is a key zone here at this $52 target. I think that we're oversold in oil. I think that the stochastics may start to turn around. We may see price in oil start to consolidate here, kind of how you guys see it consolidate down there, down here, before it makes its next move up. Okay, so for me, I think that, from $64, a couple of days ago to being able to buy the same stock for $52 is a buy signal for investors. So I think that investors would like to be able to buy, oil at these levels here around a $50 target. And so I'm expecting, more money to come into oil there. So you may want to take a look at some oil stocks like Exxon and which again, they have their earnings coming up. You got the Chevron and Hess, those type of companies. But again, this is a development for it to chop sideways a little bit. More than likely, probably after this week, then I'll probably be looking at to making some plays. Again, but you can set targets in here. You want to drop an iron condor or something like that in there, a butterfly, what have you. You can do all of that. Okay. But yeah, I just want to make sure that we cover all the main themes for this week. With that being said, I'll take some from you guys here, and then, we'll bring the session to a close basically. But another key thing to remember is that on Wednesday, the Feds are going to be, doing a monetary policy. So remember, if you got any risk on that, be careful because, depending on the Fed's decision, the markets will move. It may not be just the decision itself. It may be information that they reveal to investors, from the current environment that could also shape up the markets. If they say anything about, we notice an inflation is starting to creep up, or we're above our targets, what have you, anything like that, then, investors will probably sell off. So, I mean, you just got to see. But, those are the main things. Also, we got the BEA, the Bureau of Economic Analysis. They're going to be, releasing their advanced estimates for GDP in the fourth quarter on Thursday. And I don't know if you guys saw in the World Economic Forum, but there was a lot of big dogs that was out there. The head of the IMF, Georgieva, she was there, and she was talking about, with debt being a major issue here. And I believe she's forecasting GDP around the world to be lower this year. I did actually get a chance to see Jamie Dimon from JP Morgan. He was pretty optimistic. I believe some of the things that he was talking about that concerns him is inflation. So inflation, that's a big thing. JP Morgan, that's a big dog, and Jamie Dimon speak. You kind of probably want to listen. He's basically like an insider. So inflation is something that concerns him, that, inflation is a risk to the markets. Who else? Ray Dalio, same thing. Ray Dalio was telling people, hey, buy gold. Gold, that's what he was saying. And he said, cash is trash, okay? And so just remember those things here. And again, right now, a lot of people don't understand how money works, man. I tell you guys this, when you see, just because somebody's rich doesn't mean that they're smart. Doesn't mean that they are good with money. Anybody can become rich. You got lots of millionaires as just dummies and just idiots. So don't go running and following people just because they say they are a millionaire or what have you. I saw some kind of, I think it was a video of Floyd Mayweather, right? He's ultra rich. I think he's the highest paid athlete in the world, which is great. It's phenomenal. He has a phenomenal record. But he's sitting at a table full of cash just all over the table. Maybe, hundreds of thousands of dollars just in cash. Okay, cash. And for you guys, y'all being for a while, you already know, cash is just not the place for you to actually be putting. This is fiat currency. It's depreciating because of inflation that eats away the value of the dollar. I would have been more impressed if it was gold bars that he had in there, but who knows if they would kill him or not for having gold. Okay. But he should have that money not in cash. It should be in gold. So just somebody tell Floyd, hit me up if you want me to help him, get his money, get his money, manage his money, right? Okay. But he should not be holding all that cash, that shoebox money, that under the mattress money right now. It's not working for you. Smart money does not do it that way. Ray Dalio said cash is trash. And it really is, because inflation is getting ready to kick off. The feds are putting money in the system to get people to spend money, and they're printing money. They're buying up treasuries. They're in the game. So the value of your dollar is going to be depleting. You need to work your capital. That's why all this money is pumping up in the stock market right now, because, again, the stock market made 30% last year, okay? 30%. What did that cash that Floyd had on that table, how much money did he make off of that cash sitting there, okay? Even in your savings accounts, you're making about 0.9%. That's the current, interest rates that you get, 0.09%, okay? That's nothing, all right? The stock market made 30%. Just when you putting your money in the stock market, you would have made 30%. How easy is that? This money you don't even have to work for. You ain't have to bust a sweat for. That's what smart money does. So holding the cash to the ear like that, that's just ridiculous. Having money all over the table, that's just ridiculous, because your cash is losing value. You need to put that capital to work, whether it's in real estate, some kind of hard asset, whether it's silver. Silver is dirt cheap right now. Silver is going for $18, and $18 right now. You can probably get it like $20 on the market, what have you. Gold. Also, that's, gold is protection from inflation. Okay. So just, key things like that. At Davos, Ray Dalio spoke, and he said cash is trash. He said you want to probably put your money into technology stocks, because technology stocks have been, pushing the markets up. We're moving into this we're in this digital age. Technology is where it's at right now. We're about to see, self-driving cars. Okay. Self-driving cars is what's going to be, that's going to be, popping. It's already in the place now. They got to ease it in. But those kind of things, computer chip companies, we got to get bigger and better and faster chips. We got 5G that's getting ready to roll out. You guys already know what's coming out. Artificial intelligence. This is what's going to be driving the markets, that technology. And then you need some gold, because the feds is in the game. They're messing up the system. Okay. But if you're not in this game, then you're not benefiting from the feds putting money into the markets. I was telling you guys that. I don't know if y'all follow us on the Instagram. Make sure you follow us on the Instagram too, because I'm posting short little video clips from our game plan Sundays, little small snippets from the wisdom that I'm giving here. So, little digestible pieces so that everyday people don't feel too intimidated when you come to the markets. If you go and try to trade with my mentors or anybody else, they're so far above and beyond people, you'll be lost. So that's why a lot of people like to come to Wall Street Jackboyz, because this is the down to earth approach. This is where anybody can come in and you can get in and learn whether you're trading or you're not trading. So definitely appreciate that. With that being said, anybody got any plays that you want to take a look at? Ron, you don't have any setups? Justin, I know Justin full of setups. Mia, Kareem, Topaz, Dustin, Mark, Chance, what's good, my man? Anybody got any plays you want to look at? Terrence, any questions? Is that BLL? Seeing, what's BLL or BII? Is that what he's saying? BII? Is that what it is? Or BLL? Confirm that for me. I'll take a look at it afterwards. Oh, Ball Corp. Okay. Well, we can't find that one. Oh, here we go. BLL. That's what it is. Okay. All right. $71. Ball. All right. So what I'll do is just take a swing high to swing low, and then I'll get another swing from this one here into this one here, just to get us some levels to take a look at here. Pulling up the stock itself. The move in here is actually pretty much already passed, if you ask me. When it dropped down beneath the 200 moving average, we got the signals. This was the signal to get in, the ride up to this level here. Now we're overbought. So we're in overbought territory. This is not an ideal position that I would like to get in for the long side, but let it come back down some. It consolidates, see how it behaves. We want to see these levels ultimately come back to these kind of levels where the arrows start to point up and says, hey, get in. So that's how I feel about that one, Kareem. What else we got? CN. That's right. Mark says, manage risk, you will get the next one. That's right. You got to manage risk at all time, man. All right. So when you look at this one, my man Ron be coming through with him, man. Y'all got to get Ron. Y'all got to get Ron. I mean, I'm telling you, the boys, listen, the boys study, man. I don't know. Listen, this is what teamwork made the dream work. You can't see it all. But that's when I started Wallstreet Jackboyz. Mia, you been here. Mark, you guys been here. All of y'all know when I started Wallstreet Jackboyz. It was hey, let's get all the top investors, top traders would come together and we actually attack the markets together. Teamwork make the dream work. You don't see everything. But when you take a look at a situation like this, you can clearly see the flag, okay? This is a play, okay? You see the play that's there. That's the flag. We got a buy trigger that's in here, okay? We also have, so again, we got further signals here, okay? That's a buy trigger to enter. Okay, stochastic's moving up. We got the squeeze. The squeeze lets us know that compression is in there, and this thing is going to have to pop one direction or another. It's going to have to go up. It's going to have to go down. Either way, it's going to have to make a direction. We add on some risk because we're taking a bias in direction, but we see the trend starting to move up. So we have a bullish bias here, and that would be the setup that I would like to see in that situation here. But that's a really nice play, Ron. It looks really good. Again, if you get in, just make sure you manage your risk. Anything can go. We have the setup, but all setups are just, they don't work out 100% of the time. If that was the case, everybody would be freaking millionaires, right? Chance, my man, you're looking at NIO. Let's take a look for my man Chance. Thanks for joining us on the Facebook side. Here we go. NIO. What do you want to know on this one? You're looking at NIO. Okay. So for the short term, just taking a look at this chart here. Looks like we did something on it before and it already made its move. This area here was critical for this stock here. I think that it was after earnings. It did get the pop above the 200 moving average, which was significant for investors. As you can see, popped up into its top level and it fell down right back to the mean. Okay, revert to the mean. And then we got the buy-in that came back in here. The buy-in came back in. We hit the Fibonacci extension level right up here at this top level. And then we got the sell trigger that's in there right now. So for that reason, I don't like it to the upside. This would potentially go sideways or more than likely further down for right now. You want to catch that up on the next leg up. So you want to wait till, it comes out of this overbought territory and it looks similar to this kind of low like this, something kind of like that. You see it down here. All right. You want to see the momentum shifting up to get in. The momentum is shifting down right now. So for that reason, I don't like that play for the long side. Doesn't mean I'm always going to be right, but that's it. CN is also, you're talking about CN, Justin? Okay, yeah. The CN, I like that that setup in CN. That actually looks pretty good. We'll have to see how it plays out. But I definitely will probably take some risk in there because I like that setup. All right. Okay, hope that helps you out, Chance. Hey, make sure you guys, any of you guys get the new Intro to Options trading book. Listen, make sure you spread it out, get that out to somebody. I wrote the book. It's really cool. Look, you guys let me know what you feel about the book also. I would definitely love to hear your reviews. I'm not an author or anything like that, but it's something I did a year ago and we finally put it out. It takes a lot of work, to get you guys value, and I'm just doing my best on work, and we work. That's what we do. Put together this really nice book, Intro to Options Trading. If you don't have it, make sure you get it. Whether you need it or not, pass it along to somebody who may need it, okay? It's called Intro to Options. Pretty short book, but it's really cool. It's everything they need to know to get started. So check that out. Keith, my man, yeah. All right, but yeah, so just remember right now, the markets are down right now. And again, this may be the situation from the U.S. embassy being bombed right now, but the markets is not feeling it, and the markets are down right now. So we probably have a down day on Monday, tomorrow. Earnings could pull us through though, and so let me just pull back here, see if I can get us some levels on the ES. I already showed you guys the Russell, exposure there. But just taking a look one more time here. I mean, the market is overdue for a pullback. It'll be pretty healthy that we do get a pullback, at least to the 50 moving average. Let me just move this out of the way. All right, so you can see that. All right. So at least here to the 50 would be a good point before I start looking back into, long in equities. But if you come here and start to solidify, that's good. I mean, it depends on how this coronavirus really plays out. If it really goes really bad, then this thing is going to really pull the markets down. Whatever's going on with this embassy bombing or whatever, if that escalates, that can really bring us down to the 100 moving average. Down here to the 200 moving average, I don't see that kind of move happening. However, anything can go, but just understand that these are key levels that you guys want to make sure you're paying attention to. So again, if it come down here, that could be the first position for a buy. The next position for a buy would be here. The next position for a buy would be here. This would be a really bad, ugly move here, but the markets need that kind of move, to be honest with you guys. All right. But in order for that to happen, earnings really got to be terrible. If the earnings is terrible, then we can see that happen. All right. What you think about May Money, man? I think new highs are coming. Okay. I'll take this one last one for you guys. We'll bring it to a close. All right. What do you say? CFRX? CFRX. Okay. So yeah, this is a penny stock, and Chance, I don't specialize in penny stocks. My girl Topaz in the group, she's in there. She could definitely help you out with that. And Justin, I think Justin get down with some of the penny stocks too, and they could probably help you out with that. Penny stocks are volatile. I mean, we can't really identify the behaviors on these things. We can see setups, but these can go anyway. This is a nice little move that you got here. If you got in here around, 20 cents or what have you, sold off at $1 top. It looks like that move is pretty much over with for right now. But again, we like to trade blue chip stocks. These are stocks that, we have behaviors that we can predict. You kind of know certain stocks at certain seasons, they perform better. If there's a hurricane season, companies like Home Depot, they're going to be the beneficiaries of that. Lowe's and Home Depot, you can kind of predict that kind of stuff, right? If Apple's coming out with a new phone, Apple always sell out. That's a staple. You can predict those kind of things. The penny stocks, we don't have enough information on these to really, give ourselves high probability setups. It's not my cup of tea, but there you can make money in there. So, hey, shout out to you for making money in your penny stocks. But I wouldn't be the expert on those, my man. But hey, I appreciate you at least stopping by here, man. Hey, if you enjoy, what we're doing, man, make sure that you hit the like button and check out our videos. Make sure you guys check me out. Check us out on YouTube. Subscribe to the channel. I'll be posting some videos, trying to get you guys some content out. See how y'all like that. Looking for anything from you guys that we can help to take Wallstreet Jackboyz to the next level. We do have new curriculums that's coming. I'm working day in and day out to get this stuff together. I'll be filming the new stuff starting next month. Next weekend, I'm actually we're gonna take a 1 weekend break. So hate to break the bad news, but no game plan Sunday next weekend. I really did not want to actually do one today because of my hurt, the loss that I feel for the loss of, the icon, the legend, Kobe Bryant. I've actually been crying a couple of times a day. Like, y'all don't really understand. This is really taking a lot out of me. And it took a lot for me to actually show up here tonight. You asked my wife, I didn't even want to show up, to be honest with you guys. But, I made a commitment that, hey, we'll do that. So we'll take a break for next week. Give me some time to recoup, spend time with family, really focusing on things that really matters the most in life, which is family, your loved ones. It doesn't matter how much money you make. How high you get up in life. I mean, you guys see, Kobe, he did it all, and he's no longer here with us. Left behind a beautiful wife and a couple of kids. His daughter died with him. It was just terrible. It's really crazy right now, man. So anyhow, I let you guys get to it. Just remember that it's not all about money. You know what I'm saying? When you're trading, try to trade with a purpose. You know what I'm saying? And whether you make $1 million or you don't make $1 million, it doesn't matter. It's not, why is $1 million your goal in the first place? When I started this, I never had a goal of having $1 million. When I actually made my first $500, I was like, yo, that's it. I made $500. I made money, right? When I made my first 1,000, I made money, right? That was what the goal is to be. Like, you know, your goal could be your goal, but don't let other people's goals be your goals. Remember that, you know, take that from this, make your goal your goal. If you can make $500 a month doing this, hey, you're successful, man. Keep it up, keep it going. Okay. Anyhow, with that being said, I bring the session to a close, man. I appreciate you guys. I love you guys. Man, y'all really help kind of bring my spirit up and get my brain off of all the crazy stuff, man. But I appreciate you guys, you know, just stopping by and joining. Okay. All right, gang. So that's it for Game Plan Sundays. Going into this week is going to be really heavy. So just remember, Monday is going to be pretty light. But on the earnings side, we have Tuesday, which kicks off with Apple, 3M, AMD, eBay, Lockheed Martin, Starbucks, and United Technologies. Apple is going to be the key theme there. On Wednesday, we're going to have Facebook, Microsoft, ADP, McDonald's, PayPal, and Boeing. So Facebook and Microsoft are going to be the big names from there. On Thursday, we're going to have Amazon, Coca-Cola, EA, Eli Lilly, UPS, and Verizon. Those are the main themes on Thursday. Amazon, pay attention. Friday, we're going to have Caterpillar, Charter, Chevron, Exxon, and Honeywell. So those are the main themes on earnings. Now on Wednesday, we're going to have the Feds, the FOMC. They're going to be announcing, you know, monetary policy, whether they're going to cut rates or, you know, they're going to raise rates or keep it the same. Consensus that they're going to keep it the same. So stay in tune on Wednesday at 2 p.m. On Thursday, we have the Bank of England that's going to announce their monetary policy decision, which will also expected to keep the same as well. So those are the key things. Anyhow, I hope you guys enjoy. Make sure you hit that subscribe button and make sure you check out more videos from Wallstreet Jackboyz right over there. Peace.